Credit scoring model firm Fair Isaac has gotten slammed this week after federal housing regulators said that government-sponsored enterprises Freddie Mac and Fannie Mae will immediately allow lenders to use VantageScore 4.0 for assessing borrowers' creditworthiness. The VantageScore is a joint venture of the three major credit bureaus, Equifax, TransUnion, and Experian. Joining us now on a Fox Business exclusive, VantageScore CEO Silvio Tavares. It's so great to have you here, and this is big news, obviously, for your company. Talk about how many borrowers out there do you think would have access to a mortgage, knowing they've got that Fannie Freddie backing, that didn't have it before?
Well, that's the really big news, and Cheryl, thank you for having me on. It is big, big news. 33 million more Americans get a VantageScore compared to the conventional credit score. And the reason why that is so important is historically, Fannie and Freddie only used our competitor's score. That company had an unintentional government-sponsored monopoly. We thank Director Pulte for changing that this week, enabling over 33 million Americans to get their first credit score. And of that group, we anticipate about 13 million will actually have a VantageScore 620 or and above and their first chance to own an American home. That translates into about $1 trillion in incremental mortgages in the United States. It's a really big deal.
It would be great to see lending certainly increase across the country, maybe give some of those first-time borrowers a leg up. But I just want to add here that the VantageScore 4.0, that's rental income or rental payments, utility telecom payments. But some of these consumers, they could have either maybe a thin file, maybe no traditional credit file. What would the risk be with that then?
Well, that's the part of the story which is so important. The reality is our competitor score has been used for over 3 decades. It's old. We often refer to it jokingly inside the company as the FICO score. And it's because it's old technology. It doesn't look at the right data at the right time. It's obvious if you pay your rent on time for 10 years, obviously that means you're going to be creditworthy. VantageScore uses new technology, including rental data. And if you are a veteran that's coming home from serving your country abroad, you're now going to have a VantageScore. If you're a rural American, you're going to now have a credit score. And importantly, if you're a renter and you pay your rent on time, that's going to contribute to your more accurate credit score. Every single bank that has looked at this, Chase, Bank of America, third-party organizations like the Urban Institute, everybody that has looked at this knows that the VantageScore is more predictive, more inclusive, and that's ultimately why the FHFA chose to make this decision. And we thank Director Pulte for taking this decisive action to include more Americans to have access to their American dream.
Right, and understood that Bill Pulte pushed this through, but wasn't this in the works under Trump's first term? I mean, doesn't this go back to 2018? I mean, this isn't some brand new idea or brand new thought that just popped up for mortgage borrowers across the country and for the credit industry. You've had time to work on this, correct?
You're so right, Cheryl. All the way back in 2018, the president signed into law the Credit Score Competition Act as part of the Economic Regulatory Relief Act. Okay. Chairman Senator Scott was the one who sponsored this, and the reality is it was very clear that our mortgage system, backed by government-sponsored entities like Fannie and Freddie, it needed an update. It needed new technology to include more Americans to have access. That law was passed all the way back in 2018, and it wasn't implemented until now. And that's why this is so important, because both sides of the aisle, Democrats and Republicans, and the president have supported this, and it's now finally being enacted.
Yeah. Well, before you go, I do want to ask you this. One of the things that we learned from the subprime mortgage crisis, the financial crisis, 2007, 2008, is that there were people that were getting loans for homes that maybe didn't need to have those loans, and the defaults and the repossessions were pretty brutal. It was a pretty tough time for the country. Are you worried about that risk being more of a factor now in the housing market than it was then?
Well, this is something that we focus on all the time. The short answer to your question is if you use the VantageScore, the answer is no. The average VantageScore at the end of June was 702. If you look at our competitors' score, their score was 715. So it's much higher. So our data is more predictive, it's more inclusive, and it's more accurate in terms of predicting the consumer's creditworthiness. That's why over 3,700 banks and financial institutions use VantageScore today. 8 of the top 10 banks use VantageScore today, and it's the reason why we grew 55% last year. Every company that looks at this sees that our credit score is more inclusive because it's more modern, and it's now time that we bring that modernity and that new technology to the mortgage system at a time where, quite frankly, it's very difficult to buy a home. So having this new technology is a big boost. It reduces risk. It doesn't increase it.
No, it does. And I think that this will be, ultimately a good thing for housing. Silvio, Tavares, thank you so much for being here. Appreciate it.
Thanks for having me on, Cheryl.
All right.